All right, looks like we are good to go. So there are 1 million Canadian mortgages that are up for renewal this year. And so what we're going to do is share with you how to come ahead with that. And also last week we spoke briefly about the Trump tariffs. So just give you some take on that. When we last spoke about it, it was still a definitive imminent threat. Now we are looking at a 30-day reprieve. So we'll give you a broad overview on that. Some of the takeaways we're expecting you to have today from Mortgage Monday is how to negotiate a lower rate at renewal. So don't just accept the lender's offer. Why your monthly mortgage payments could increase by 30 to 40%, and how what you can do about that. Should you choose a short-term, a fixed, or variable mortgages? We're going to give you some take on that. How Edmonton's economy and real estate market could impact the mortgage renewal options. Now, why mortgage stress tests may not apply if you switch lenders. Government programs and incentives that can help homeowners renewing their costs, and the best strategies to reduce mortgage payments and avoid financial stress. So today here on Mortgage Monday, I'm with Rob Payne from Mortgage Architects. Rob, thanks for coming in.
Thanks for having me, Jason.
My pleasure, and let's get right into it. So just basically, let's just talk about the Trump tariffs to begin with. So we knew that he was talking about 25% tariffs on everything they import from Canada, except for energy, basically, a 10% tariff on that. We came to an agreement suggesting that we would send 10,000 RCMP to the border. We set a budget of 1.3 billion, I believe, and a number of different things regarding fentanyl, appointing a fentanyl czar, et cetera. And Trump has said, okay, we'll give you 30 days. Let's see how we progress. So we're kind of in limbo, but we are making steps. And so, Rob, what have you heard regarding mortgages and how the Trump tariffs could be changing things in the mortgage world?
Well, when he first announced it, we expected the rates to drop quite significantly if we were going to be in a tariff war. However, last Monday, we expected them to drop. Then they came to this agreement, and all of a sudden, everything stalled in regards to rates. So right now, it's kind of a little bit of unknown, and none of the lenders really know which way they might end up going. They're just in a wait and see kind of mode, I guess.
Yeah, and that makes sense. And so there's going to be all kinds of insecurity. So the Bank of Canada is saying if tariffs come through, there's a good chance there's going to be downward pressure and there'll have to be some aggressive Bank of Canada rate changes. Then it's also going to depend on how we respond. So does the Canadian government just print a whole bunch of checks for people? Well, we saw what happened in COVID times, and the printing of money can actually increase the long-term rates. So we saw the bond rates increase, which also made the 5-year rates increase. And so I think if anybody says that, we can expect rates to drop and or fall, or sorry, and or increase, they're probably right, because there will be some influences in multiple different directions. But it's a wait and see for those 30 days. So rather than spend a lot of time and talking about what ifs, let's talk about reality. So we know that there's 1 million mortgages still to be renewed here in 2025. And so let's talk about the mortgage renewal and see if we can't help people negotiate and navigate through this process. So what is a mortgage renewal?
Well, mortgages come up for renewal depending on how long of a term you have. Terms go from anywhere from 1 year to 10 years. And usually when you purchase a house, you're purchasing it over 25 years. So a renewal come up on average, most people it's every 5 years. And all you're doing is just renewing to say, this is how much we paid off. We want another 1, 3, or 5 year term going forward.
Yeah, and that's perfect. So sometimes I hear buyers getting confused. So just understand that your mortgage is taken over an amortization. That's the entire life of the mortgage. So 25 or 30 years in most cases. But that rate that you're being guaranteed is not for the entire 25 or 30 years. So they basically chunk down the mortgage into manageable contracts that allow everybody to understand what that payment will be for that period of time. So we refer to that as a term. So you can have a 25-year amortization where your mortgage is taken over 25 years, And you can have a contract with the bank that for 5 years, this is what your rate is going to be. And now it's my understanding that generally lenders just send out a renewal letter and says, hey, your mortgage is up for renewal. Here's the rate. Is that rate normally the best rate that they can find?
Never. It's usually what banks have in mind is that most people don't want to spend the time or effort to go and shop around and try and get the best rate for them. They just assume that their bank is going to give them the best rate. And banks won't necessarily do it. It's similar to when you hear people talking about searching for a new cell phone provider or internet provider. You kind of have to shop around every time it comes up for renewal so that you can make sure you get the best rate. Banks are hoping that you will just sign that first offer and then they'll get you at the highest rate that they can.
Yeah, and so that's perfect. So then what's the best way to negotiate lower rates?
What I like to tell my clients is call your bank or whoever has your mortgage, tell them you're shopping around and you want the absolute best rate that they will give you. Because this is their one chance to show that they're loyal to you as much as you've shown that you're loyal to them. If they're not going to give you the best rate right off the bat, then you would be better off searching or talking with a mortgage broker to find out what better rate you can get.
No, that's perfect. So you're going to have some buyers that are concerned though and say, hold it, my life has changed. I changed jobs, maybe I make a little less, or maybe we've bought cars and all of a sudden we have more debt. And if I talk to a mortgage broker, am I going to have to requalify?
Yes and no. You might have to, depending on which bank we're going to. A lot of lenders are getting on board with what the Canadian government said, that you don't need to requalify if you're signing up with the same bank you're currently with. Well, if you don't have to requalify if you're just renewing with your current lender, why should you have to requalify with a new lender? So we're starting to see more lenders go into that realm as well, where you don't have to requalify. But if you do need to, I'm going to tell you, ask the questions. Sometimes it'll be better off that people's lives have changed so much that we really can't move the mortgages and they have to sign with their current lender. But I can give them tips on how to renegotiate that to get the lower fee or lower rate, I mean.
I know, and that's perfect. And so even if you're feeling handcuffed out there or, thinking you have no options, reach out to Rob. Rob's going to be able to give you some perspective and ideas on, what some options may be. It may be the better rate, or it may be better terms in the mortgage itself. So keep that in mind and reach out anytime you have uncertainty. Rob's happy to take your call. So now let's talk a little about rising interest rates and payment shock. So with the mortgage rates, sitting 4.5 to 5.5, how much do you think it really increases those payments at renewal?
Well, contrary to what a lot of things have been coming out in the news saying your payments will double or triple, that's not the case, because you have to think when you sign that mortgage 5 years ago, the balance was probably anywhere from $50,000 to $125,000 higher. So yes, you were making payments on a low rate, but now when you renew your mortgage, the total value of the mortgage is a lot less, which means your payment might increase with a little bit higher rate, but it's not going to double. The worst thing that you can possibly do is kind of bury your head in the sand and try and avoid it and waiting till last minute, because that's when you start to make mistakes on your payment is higher because you've got no choice.
Yeah, and that's exactly it. So if you are stressed about these higher payments, Rob does have the ability to go back and try and take your mortgage back over a longer period of time, right? So it's not just a renewal, but it's basically a refinance to be able to make that a little more manageable. And so there are options out there. So if you look at it right away and you panic and say, oh, the bank has told me my rates are going to go up to this, so therefore my payment's going to be this, and that's stressful, ask some questions, right? Are there options to be able to bring these payments back down? Now, if I were to talk a little bit about how interest rates are going to affect the Edmonton market, we have a lot of people hovering, right? They're saying, "Oh, are rates coming down? What's happening with the economy? What's happening with the government?" And we have an election looming. There's a lot of uncertainty out there, and so a lot of people want to know what's happening with the Edmonton market, and specifically how could increase rates or decrease rates affect the market. Right now, what I'm seeing is we still see a large net migration. So we're having a lot of contacts from people from Toronto and Vancouver, for example, that are looking for affordable living. We do have some pretty aggressive builders. The city, we were just at an event on Wednesday, and they had a discussion with Pacesetter Builders and somebody from the city of Edmonton. And Pacesetter acknowledged that Edmonton is the community that allows building permits and get them to start doing foundations, get in the ground the quickest out of all the municipalities that they work with. And so that's powerful to understand as well. So Edmonton is working hard to be able to get some new product out there. That being said, our net migration is high, our economy is fairly strong, and I believe what this rate or what these rate increases are doing is very minor in the whole grand scheme of things. So we will see a strong Edmonton market, and it will continue. Um, and so, why is it important in your mind, Rob, there to compare lenders at renewal rather than just automatically signing that piece of paper that they send you?
Well, the biggest thing to remember is the person that's going to care about you the most is you, not your bank. So you've got to do your due diligence to find what's best for you and your family based on your current situation. Just signing into what a bank offers you, hoping that they're going to give you their best, is a way that can cost you thousands and thousands of dollars over the term of your mortgage. So mortgage brokers are free to use, to call. We will give you the best advice if we can show you what they're offering compared to what we might be able to get with a different lender. You're better off calling and taking the time to find out.
Yeah, no, exactly. And so, once again, just default, make a phone call, ask some questions. Don't be shy. We see all different types of people in different scenarios. Life changes, life happens one way or another, and it's really important that you understand your options. And so, what if somebody does elect to switch lenders? Um, what's involved with that, and is it really worth the effort?
Well, it's, in my opinion, it's worth the effort depending on what you're looking for. Like when you're switching lenders, we're going to have to go through a whole application process again. We're going to need some documents to make sure that we can qualify for the mortgage. But it depends on what you're doing. A lot of times when we start talking to people, their biggest thing is rate, rate, rate. But technically it's not, it's your payments. What are you trying to accomplish? What are you stressed about? What is it that you need out of your mortgage and from your lender? Some people I talk to, the most important thing is trying to get really large prepayment privileges, which a lot of big five banks don't offer. Or if uncertainty of their job or their family situation, that maybe they might have to break the mortgage in the future and they don't want to have to pay a massive penalty to do that. So it talks from talking to someone that's going to find out your situation and what it is you're looking for.
No, perfect. Now, are there fees and risks associated with switching lenders?
There's no fees associated with it. In general, it depends on what you're looking for. Like sometimes there might be a fee to put the charge on with land taxes. You still have to pay for a lawyer sometimes. But we'll go through all those steps beforehand, and a lot of those fees you can get put into the mortgage as well.
Perfect. Yeah, that is a great example of a fee that may occur is when you have a new lender, The lender needs the registration on title to change because obviously it's no longer CIBC, for example, it's now TD. So there would need to be a lawyer involved, and there will be some fees associated with registering that on title, but it's nowhere near what it costs for the purchase. Now,
Correct.
you had mentioned there's some policy changes that made it easier to renew mortgages, so that's great. Now, with the big questions, though, everything looming, right? Trump tariffs, Bank of Canada rate dropping, all those sort of things. How do you decide between a fixed and variable rate in 2025?
Ooh, that's a fantastic question. It's going to depend on people's situations, right? I right now feel that variable rate is the way to go until near the end of this year, and we'll see what rates are at then. However, if someone likes to know what their payment is going to be for the next 5 years because they don't anticipate any raises or anything like that, and they can sleep at night knowing what their payment is going to be, then we would tell them to go into a fixed. But I will find that out when I'm talking to people. Some people like to I guess play the market kind of thing and watch rates go down. Historically, variable rate has done way better than fixed rates for as long as I've known it. But it all depends on your budget and what you're comfortable with every night.
Yeah, some people like knowing for the next 5 years, this is going to be the monthly mortgage payment that I have to make, and not having to tie in every time, there's a discussion in the news about Trump tariffs or about, a pandemic or anything like that, and how that's going to dramatically affect my monthly payments. So some people
Yeah,
just like the mindset of knowing what that monthly payment is. And so that's
even
also
if you,
important when you're chatting with Rob. Sorry, Rob.
yeah,
I think it's also important when you're chatting with Rob that you let him know, am I risk adverse? Do I just need to know what that payment's going to be for the next 5 years? Or am I the kind of person that would really like to save some money and prepared to gamble or risk a little, risk paying a little bit more to try and save a little bit less? So those discussions are really powerful to have with Rob. Was there something you had wanted to add there, Rob?
I was going to say a lot. You can usually tell if you hear in the news when the Bank of Canada is going to make their interest rate announcement. If going into that you start to feel anxious or nervous or stressed, then you know you should be on a fixed rate.
Yeah, it's a good call. Yeah, think of that as your barometer or your thermometer of how you feel in those moments. That's a great idea. Now, are we seeing a trend towards shorter terms then? Are we seeing people head more towards the 1 and 3 year versus a 5 year?
I've actually seen more people going to a 5 year than last year. Everyone was picking a 3 year because the rates were quite high, and they're hoping in 3 years that the rates will be lower. Right now, everyone's kind of picking a 5, but more so a 5 year variable with the option of locking in at any time into a fixed rate.
Okay, so let's talk about that a little bit for a second. So somebody has the ability to get a variable rate mortgage, but if they can't deal with the stress or they're starting to see the rates increasing, they then could lock into a fixed rate?
Yeah, you can lock into a fixed rate at whatever your lender's fixed rate is for the remainder of the term of your mortgage. So if you got your mortgage 2 years ago at a variable rate and you got a 5 year fixed or 5 year variable, you could lock in for 3 years at whatever their fixed rate is now.
Perfect. And so let's shift now to some strategies to help reduce mortgage payments or the monthly payments. So during this time of transition, when we start to think about switching lenders, we do hear often people say, can I make a lump sum payment? And so what are your options to make the lump sum payment at that 5 year renewal?
It depends on who your lender is. Like sometimes you can make it, like there's some lenders where you can only make your prepayment once a year on the anniversary date of your mortgage. There's some lenders who you can make a payment every single day of the year as long as it's at least $100 towards your prepayment. So You'd have to find out from your lender what your prepayment privileges are, how much you're able to do. Some are 10%, some are up to 20% of the original mortgage balance. So when it comes to the 5-year, I'd look into it, or when your renewal is coming up, look into it, find out how much you can put down before your renewal comes up.
Okay, perfect. And so another option that I had mentioned earlier, if the payments are feeling overwhelming, right, with the new increase in rate, you have the ability to go back and extend the amortization again, basically doing a refinance. But can you explain a little about how that might work so that people can have a strategy to make sure their payments are manageable?
Yeah, there's actually two different options with that. One is a refinance where, let's say you had a 25-year amortization, 5 years later, the payments are too high. We can extend that back out to 25 or 30 years, which would bring your payments a little bit lower, probably more in line with your budget. They call that a refinance. So you pay a little bit higher of a rate than you were previously. The other option is if you've had a 5-year mortgage and let's say you were paying biweekly, chances are after 5 years, your term left is going to be more like 17 years. We can extend that back up to the original 20 years without it being a refinance, and you'd still be able to get the lower rates. But because you've been paying down more principal, your balance would be a little bit less and your payments would be less.
Beautiful. So that's a great example of how that biweekly accelerated can be a benefit. So maybe if you want to touch base on that, what is a biweekly accelerated payment schedule versus your typical monthly payment?
Okay. So monthly payments, as everyone knows, would be 12 payments in a year. Bi-weekly, there'd be 26 payments. So it'd be an extra 2 payments over the year or an extra month. Accelerated bi-weekly, they take an extra monthly payment and they divide it up between the 26 payments and put it in there. So it's like a $10 difference depending on how much your mortgage is every single payment, but it brings your amortization or your balance down quicker.
Yeah, so on a 25 years mortgage, by just going biweekly accelerated, you can reduce the amortization to under 22 years. And so, there can be some power in that as well to be able to understand how that structures, because then it gives you options later on. So if you have been on a biweekly accelerated, like Rob had mentioned, there is that ability without making the adjustment in the mortgage to be able to basically take advantage of those early payments that you were making to be able to help minimize your payments in the future. And so something else I'm hearing from people at this renewal stage where they're saying, we have to decide for the next 5 years, what are we doing? Are we happy in this home? Are we going to be needing to move to a bigger home? Are we going to be downsizing? Kind of creating some strategies from there. Are there any costs associated at the end of that 5-year term to cancel that mortgage? So for example, if we were going to go and find them a new home.
Yeah, there can be. If you're in a 5-year fixed, there can be some fees to get out of it. Usually it's a 3-month interest when interest rates are going down. You have a 3-month interest penalty to get out of that mortgage. If interest rates are going up, you have what's called an interest rate differential. And those can vary a lot between what we call monoline lenders and the big 5 banks.
And so that's important to understand that if you are thinking about doing a move in the next 5 years, if you lock into another 5-year term, then there could be a big penalty to get out. But if you're getting out at renewal time, there won't be that penalty because basically you're saying the contract has ended and away we go. And so that's something else to think about is not only is it time for renewal, but are we going to want to make a housing change in those next 5 years? Because if so, have a discussion with Rob and see how to be able to minimize your cost, your expense when it comes time to get out of that mortgage. There is something called porting a mortgage where we basically move it from this home to that home. So something like that could be available. But what are the limitations on that, Rob?
Well, it's going to depend on the lender and what type of mortgage you have. It's difficult to say what the options are when it comes to porting without knowing someone's mortgage or what they have right now. But again, it comes back to reach out and find out.
Yeah, and I generally say to the clients, it's generally pretty safe to assume that a porting of a mortgage has to be identical. Okay, the dollar amount would have to be identical. So if you're downsizing and your future home is worth more than what your mortgage is, or sorry, worth less than what your current home is worth, and so therefore, the mortgage ratio, the percentage is different, then it's something you're going to need to think about, because some lenders will not allow that mortgage being ported to go up over 80% of loan to value. And so your current mortgage may not be portable because it's too high. They also will say, no, you know what, if it's too low and you need extra cash to be able to close, so you need more of a mortgage, they also, in many cases, will not call that a port of a mortgage and just keep it identical. What they would do is, get you to reapply, requalify, and go from there. And so if you are thinking about doing a move sometime in the next 5 years, it once again is worthwhile talking to your mortgage specialist, getting a perspective on what your options are and how to be able to proceed from there. So somebody's mortgage isn't up for renewal right now. Maybe they're up in 2026. What should someone do now to prepare for all of that?
Well, finding out exact date that their mortgage is up is key. I get lots of people who call and say, it's up sometime next year. Well, there's a huge difference on if it's up in January or December. So knowing those dates is huge. But I've got people that have reached out to me, their mortgage isn't due until December this year. But they're calling me to let me know, here's the plan, asking me what documents they need, and getting those things prepared so that when it comes time, we can lock in a rate 120 days before their mortgage is due. At least we have a worst case scenario and we're going to get this rate no matter what. But if the rates go down, we're going to go back to the bank and see if we can get a lower rate. It's never a bad option to call and find out what steps you need to take before your mortgage comes up for renewal. When you call me 2 weeks before your mortgage is up for renewal, it's going to cost you a lot because you have to renew into an open mortgage, which is usually around a 9% interest rate, and you got to pay that until we can get the mortgage approved and it funded again. So reaching out early so you can create a plan for what you need to do when your mortgage does come up for renewal.
Yeah, and that's perfect because there is, opportunities there for you to get a better rate maybe. And so by gathering your documents, it can help empower you in the situation. Just wanted to comment, there's a number of individuals watching live online. If you have any questions regarding mortgage renewal or mortgages that you'd like us to answer right here, go ahead, comment, and we'd love to answer them. But back to Rob's point of the preparation. It could be anything from understanding how your debt will change your options 2 years from now. Are you thinking about buying a car? If you're thinking about buying a new car and you're up for renewal in 2 years and you want options to be able to maybe move to a different home, or you want to be able to reapply for a better rate, I'd suggest chatting with Rob today, because then he can also help strategize everything from credit card debt to car loans, anything like that, to be able to help progress you through the process to make sure that you're able to have the options that you wanted that 2 year time span without any chaos or issue. And so let's just wrap up with one final question here. So what's the number one thing homeowners should be doing for signing their renewal?
Wow. One thing, it would be talk to your broker to find out if that's the best rate you can get. I don't know a broker out there that I've met that won't be upfront and honest with you. We want you to get the best rate. It's not necessarily always about us getting the mortgage. It's about making sure that you're satisfied with your mortgage. And if it is with another lender, so be it. We've given you the best advice possible, and that's your happiness is what matters.
Yeah, I know exactly. There's a lot of power in that. Just asking questions, reaching out, saying, I have some thoughts, some challenges, whatever my concerns are. What's the best way to go? And I feel comfortable that Rob's going to give you his 2 cents, be honest with you. And if your best bet is just to sign that renewal and go on for another 5 years, I think there's power with that. One other thing that just popped in my head while we were talking, it's also important to understand what type of insurance did you get when you had your mortgage. Okay, so if you had, and we're speaking regarding a life insurance, if you had a life insurance that was through the mortgage and it was basically mortgage insurance, be aware that by switching lenders, you have to go back through that process. And one of the other keys, though, if you do have your life insurance through one of the lenders, it generally is on a declining balance, meaning that each year that your mortgage goes down, they're only going to pay off the mortgage. It's not for, say, a fixed dollar amount of something like $1 million. Also, it's generally underwritten after the fact. So they wait until the individual passes away and then says, should we have known this, or should this have been disclosed that there was an issue back at the time that we got the mortgage? So I'm not going to go too deep into that right now. I have a very biased opinion that you want to be careful of life insurance through the lender because it isn't transferable. So it doesn't transfer from mortgage to mortgage, or from every time you do a renewal, you can't head to another bank and have that insurance continue. It's underwritten after the fact, and it is paid out on a declining balance. So we'll have a discussion about that in the future, but some things to think about. Rob, thanks for coming in and helping us navigate the renewal setup for this year. Looks like nobody has any real questions for us. So if you would like to speak to us directly, reach out to either of us. The contact info is in the description below. And thanks again, Rob, for joining us for Mortgage Monday.
Thanks a lot. See you next week.